What's good? What's good? Welcome everybody. Welcome back to the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone? How you doing?
Man, we got a lot to cover today, man. Today's market action, economic distress that we are under, and all of those different crazy things, man. Oil prices are going ridiculously insane right now. And man, oh man, like I don't know when this thing is gonna stop, but Iran is not wavering. They're like, we're gonna put bombs on the under those water. If it come through, you might get blown up. You know what I mean? So again, man, we are definitely like in the time right now. The market is so much under stress. I haven't seen crazy move for the past couple of weeks. I mean, it was very concentrated in certain stocks, but even with like up and down with QQQ and SPY and all those different, even the futures, we're still kind of stuck in a trend. We haven't gone anywhere. All this crazy move we've been doing, we haven't gone anywhere. We're still stuck in a specific range if you guys look at it. But yeah, man, let's jump into it, Wale. Let's talk a little bit about this war, man, and how it's affecting the oil right now. It seems like we might be seeing $100, $200 the oil, down the street. I don't know, but right now we're sitting at a well above over $100.
Yeah, so I'm looking. I think let me let me go back to my chart real quick. Give me one quick second.
Hmm?
I'm looking at the futures right now. So oil briefly was above $100 a barrel um, over the weekend because when we saw futures open up on Sunday, everything looked chaotic,
Very.
super chaotic. Market was down big, and then all of a sudden, oil came down below 100 and even
Mm-hmm.
went below 90 at one point this week. The strategic reserve that I guess some of the oil partners are trying to release, or they're trying to use that to help mitigate the price of oil right now. But right now, I mean, I'm looking at crude right now. Crude is up to 93. And I think light crude is up to like 90. No, light crude is up to 93. Brent crude is up to 98 right now. We hit a high of 119 over the weekend. Um, and that move was ridiculous. Like
Mm-hmm.
I hadn't seen something like that in a long time. Now, the mitigation strategy that is being used to possibly try to bring things down, Iran is saying it's not going to work. They saying prepare for $200 a barrel oil. And if I am not mistaken, if I go back 20 years, we've never seen $200 a barrel oil ever. I think the highest we've seen, I'm looking at Brent crude. The highest we saw was in 2022. We saw 137 a barrel.
Mm-hmm.
Let me see if I can go further than that. Let's see. For the last 20 years, max available. Yeah, max available. 137 a barrel.
Mm-hmm.
So we see $200 oil. I mean, I don't know what's going to happen at that point. I just paid for gas yesterday. I paid $5.50 a gallon.
Bro, I,
Just a couple days
that's
ago,
crazy.
I paid like 460.
And we talking not premium. This is just regular.
No, this is premium.
Oh, okay.
Yeah.
Wait, I'm paying the same amount, almost the same amount that you are for premium now. It's like four something. That you whatever you were paying last week, that's what I'm paying today.
Yeah. I paid like 463 last week. It's 550.
Dang.
So the problem I'm having with this whole conflict, this is the thing, and I could be wrong, but this may be the first time we have had a war involving the United States directly during the social media age.
Hmm?
And let's just be honest, not all the information that is posted on social media is credible coming from the White House.
Right.
For example, yesterday, there was a tweet from the Energy Secretary stating that the U.S. had successfully escorted a tanker through the Strait of Hormuz. A couple minutes later, we found out that that was not
That
correct.
was a lie.
And then oil spiked again.
Mm-hmm.
So we had some information from the president come out this week saying that the strikes in Iran are pretty much almost over.
Complete. Yeah, the word is almost complete. Yeah.
The market went up. Now we're hearing something completely different.
Right.
So as a trader, trading in this environment, you have to really understand that at the drop of a dime, at the change of information, you can go from a positive trade to a negative trade in the blink of an eye. Because the information that you're receiving may or may not be credible.
Mm-hmm.
So, based on just what I'm hearing directly from Iran, it doesn't sound like this is going to be a quick fix. And they already gave a list of demands to saying, okay, if you want this war to be officially over, this is what we need.
Mm-hmm.
And I just don't see that happening. So this could get dragged out for a fairly long time. And I don't know if the reserves that will be released will ease the pressure off oil as much as people think. Because when you deplete those reserves, remember that you got to replenish them. Those reserves can only last for so long.
Mm-hmm.
And I think I said this a couple days ago. It almost feels like Iran has the mindset of death by 1,000 cuts. They're just going to bleed you slowly. And they're willing to do it. So
Yeah. Yeah.
I don't know how this plays out, but I will say right now, from a technical standpoint, it's hard for me to be bullish on anything that I see in the markets at this point. It's hard for
Mm-hmm.
me, very hard for me. So I will say that we did not break the 200-day moving average during the regular session. We did it overnight, but that dip got bought up on Monday like crazy, and I think it went green if I'm not mistaken.
Yeah, it went green. Yeah.
Yeah, market went green. So now we're starting to see weakness, right? We're starting to lose those levels. I think that we're going to test that 200-day in the regular session. We'll
Yep.
see if it holds. And if it doesn't hold, I think we need to be prepared for a little bit more of a downside movement in the markets right now,
Mm-hmm.
because I'm just
Mm-hmm.
not I don't think there's anything to be optimistic about in this environment, particularly. I just don't see it.
There's so much pressure. There's so much pressure coming into the market. You know, and we'll
Hmm.
talk a little bit about the other pressure that we've seen also on that side. But I mean, if you go back to the context of the U.S. Releasing the oil reserve, the last time, just for context, the last time U.S. actually tapped the strategic reserve was back in 2022. And you guys remember that's when Ukraine and Russia's war kind of started, because that also spiked the gas prices and all those different things. So
Hmm.
they released those. They released those also during that time, right? So again, we are seeing a pattern here now. This one is a little different, like Wale said. Like this one actually directly involved the U.S. So this might actually get dragged on a lot longer than we thought. And Iran's demands is basically, they're like, hey, you got to stop. Just stop attacking us. Israel needs to stop attacking us. Everybody needs to stop attacking us. But Israel also came out and said that we're never going to stop attacking you guys. So again, this is going to be a crazy, like, if something was to happen, it needs to be like a deal that both sides are going to satisfy, going to be okay with, right? But I think with Iran, if you guys think about it, like with them having like uranium enrichment and all these different things, a lot of countries put them on sanctions. So they weren't able to trade with other countries. The only country that was able to trade with was China. So they were kind of trading back and forth with China using yuan. I mean, China's going to get dragged into this. They're kind of been quiet a little bit, but they're getting dragged into this some other way, right? So if you collapse a country's economy, I mean, this is the old school play. You know what I mean? Put a sanction on the country, put pressure on the economy, let them collapse, let the government collapse. People are going to rise because they're going to get upset because everything is prices is higher. I mean, we've seen that happen where Iran. Like a couple of weeks before the war started, you see like Iranians were on the streets protesting. Everything was expensive. The government killed a few people from there, and then you see then that whole process kind of started with the US, the Israel, and all those different things. But again, this might be prolonged war, or it could be a really short one if a deal was made, you know. But it all going to depend on whose side, who's hurting more. That's what's going to come down to. Who's hurting more? You know what I mean? So I'll just be curious to see what's going to happen in the next few months. With the election also coming in November, for the midterms and all these different things, I don't know if this is going to impact all those votings and all these different things. So this is definitely going to be an interesting one to watch over the next few months. So let's move on to the next one. Like, it's again, is the market being manipulated by headlines? I mean, we talked about this so many times where you are going to see some news come out and you have to be really, 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 be able to, decipher through all the craziness that come through on social media and all that stuff. Wale kind of mentioned a couple of tweets that came out. You look at it, you're like, oh, is that true? No, it's not true. The stock market kind of react real quick to that, and then you see the sell-off or the buy-in come in. There was an AI video just posted like maybe like a few hours ago where it's showing like rockets dropping down in Iran. It was an AI video, but it was viewed by millions of people. They thought like Iran was collapsing. You know what I'm saying? So it's like, and then the U.S. intelligence released a report that said like Iran's government is actually shows no signs of collapsing, right? So it's like, what are you going to believe? You really, really, you really got to be able to decipher through all those things, man. So let's get your input on that one, because that's with the other social media, the AI, and all these different things. I think there's a lot of fake news out there.
Correct. And as I was saying before, like I said, I can't remember the last time there was a direct conflict involving the United States where social media was like one of the main avenues of passing information. I mean, if you go look at the White House Instagram page, they're posting highlights of the war
It's active.
like it's Sports Center.
They're
and I
active.
and I'm like, wow. And
Yeah.
it's to me, it's crazy. Now, as far as the market being manipulated, again, this is something that we have seen before. We saw it last year with the tariff stuff, right? And that that was to me one of the most direct
Yeah.
market manipulation events I've
Yep.
ever seen in my life.
Yep.
Now we're seeing that the narrative of how things are going is trying to be controlled about what's going on with oil and all of that stuff. And let's just be honest, all of it is not always accurate. It is not always accurate. And the speed at which a lie can travel at this day and age, you have to be very careful as a trader. You have to be really, really careful. This is a very dangerous environment, I would say, to trade. If you're a scalper, we've got a scalper in our group right now. Shane has been doing really, really well getting in and out of positions in like 5 to 10 minutes, which I think is a good strategy to use in this market environment.
Yep.
But you really, really, really have to be cautious about what type of information you're trading on, because it may not always be accurate.
Yep.
So I don't know how long this is going to continue, because you have the US say one thing, then you got Iran saying something completely different. And you got the US saying something, then Iran comes out and says something completely different. And both sides are using social media, right? Like I don't think we have seen this before. So man, this is something that is unprecedented to me, that I just there's just some days where I'm just looking at the market and like usually within the first couple minutes, right, you get that move, and then after that nothing happens. All you see is chop. And I will say, sometimes on those days, sometimes it's better to just sit on your hands and just do absolutely nothing.
Yep.
So yeah, man, this is not a market environment that excites me to trade in every single day. Not at all.
Yeah. I mean, with the social media stuff, like I'll say, I mean, in a court of law, right? What do they say? Like, you don't have to prove something is true. You just got to throw some confusion in there. You know what I mean?
Yeah,
As long as
that's
you can
true.
confuse people, Nobody knows the truth from right. They have to just give up. They're like, I don't know what's
Hmm.
true. I don't know what's what's not true. So it's like we just,
Correct.
as long as you can throw some confusion in there, you can always, you know,
And
get the results you want.
exactly. Now you got videos that can be altered and, may be
Yeah.
true, it may not be true. You don't really know, right? And it's just crazy.
Mm-hmm.
Saw Brandon in the chat just said, yeah, Iran said, I think the FBI came out and said Iran could possibly attack California with drones. I don't know how because of the distance.
Yeah.
But yeah, I might need to just move, man. I might need to just get up out of here.
I mean,
But
that'll be interesting though. That'll be like the first. I'll say that'll probably the first attack on the U.S. soil since 9/11. That if that's happening to that magnitude, you know what I mean? And it is kind of scary because nothing is impossible, you
man,
know.
like I said, I don't know what type of technology they have. I don't know what type of information the FBI has, but that's not something that you want to hear as a California resident. But
No,
we'll
you guys
see.
already deal with earthquake and stuff. You don't want to deal with drones bombing. You know what I'm
Oh,
saying? That's
heck no.
oh
Heck
man,
no. Yeah. So I don't know, man. But I will say this. I'm going out on a limb. Just I really think that whatever sell off is coming, and I think one is coming,
yep.
we haven't seen it yet.
No, not yet, not yet, not
I
yet.
don't I don't think we've seen it yet. I think that there is still more downside coming.
Yep, yep.
I don't know when. I'm not trying to predict, but when I look at everything from a technical standpoint and just looking at how the market has traded over the last couple of days, over the last couple of weeks, nothing tells me that I need to be bullish about this market right now. No.
Yep.
So
There's a lot of manipulation happening in the market. If you look at all the charts right now, there's a lot of manipulation happening within the candle itself. You know what I mean? We get like those moving to the upside, then we get a downtrend move, and then we get bought out. You know, like okay, manipulation, manipulation, manipulation. So if you start seeing those wicks back to forth, back and back, like where the stock is not going anywhere, but we see a lot of crazy wicks, especially those buyouts. Like that's manipulation, man. They're just going in and triggering all your stops, coming back up again, triggering your stop again, come back again. Once they have enough orders, then they'll dump on everybody. Like I think I agree with you. I think the big pullback hasn't happened yet because we just stuck on a trend. Like we haven't gone anywhere.
I mean, I just keep I'm looking at the same. If let's I'm looking at a weekly chart of ES right now,
Mm-hmm.
and go look at right before the nasty liberation day downturn.
April,
Don't you
yep.
kind of don't you kind of see the same thing?
Similar.
You just
It's
got to see that
exactly.
you see upside down U just
Mm-hmm.
forming,
Mm-hmm.
just a lots of back and forth.
Yep.
Market didn't really go anywhere, and then it just rolled over.
Yep.
I'm expecting the same thing to happen.
And the thing that's
Uh,
gonna make it happen probably is when we get a big announcement from the administration saying that we're going full on war, boots on the ground. I think that's probably when the market's probably gonna.
yeah,
Yeah.
maybe we got a
Yeah.
Fed meeting. What next week?
Mm-hmm.
Yeah. So I don't know, man. I'm just nothing tells me to rush in and start buying a bunch of stocks right now. I really think that the low that we saw from the pre-market on Sunday
Mm-hmm.
when futures open, to me, I feel like we got to test that again.
Yep.
I feel we got to test that again. That level, that low on NQ would be 24,000. We look at ES, that low would be 6584.
Mm-hmm.
And if you look at um, small caps, it'd be 2416. I mean, small caps are getting absolutely destroyed right now. They're down 1.85% in the after hours.
They getting beat. Even
Yeah.
yeah, futures are down. Yeah, all the futures are down right now.
Yeah. So I think you just need to be patient. Let this thing, play out. I think the biggest thing I'll say is that you don't want to like jump the gun and make assumptions. That's
Yep.
what you don't want to do. I think if I'm not mistaken, UBS came out yesterday and was like, yeah, you should be buying stocks right now. Like you should be full in buying stocks. Um,
Um, I
okay.
don't know, man.
We'll see.
It sound like they're trying to sell you the stock that they're
Yeah,
selling. You know what I mean?
yeah,
I don't know, bro.
we'll see. We'll see.
I keep telling you, man, none of these big institutions have your best interest at heart. Unless if you're their client, they don't have your best interest at heart. So when they tell you to buy, I'm usually very, very cautious with that, you know?
Yeah. So yeah.
So we shall see. But speaking of Iran, man, Iran is saying like we should prepare for a $200 barrel oil. Like, bro, we're probably gonna see like $10 gas oil at the gas station because that's ridiculous. You know, to double from where we are right now, that's ridiculous. And the U.S. releasing those strategic reserve, I don't know what's that gonna do to the oil prices. Like, I don't even know if it's gonna happen. It's gonna help. I don't know.
I think when the strategic reserves like run out, I think that's what's gonna, from what I'm hearing, the strategic reserves aren't gonna last more than a month, if that.
Sheesh.
Like I don't think it's gonna last more than a month, maybe 2 months. I could be
Mm.
wrong, but it's to me, it's not something that's gonna provide longevity to the issue.
No. Nope.
So what it boils down to is Iran is pissing everybody off,
Yeah.
like
Literally.
everyone, because natural gas can't get to Europe,
Mm-hmm.
oil can't get to Japan, can't get to China, can't get to, and what I posted on my Instagram story the other day was just Russia sitting back talking about, hey, we got oil we can sell.
We're trying to make money. Y'all want oil?
I mean, I maybe they have to take the sanctions off of Russia and let Russia sell their oil.
Yeah.
They might have to. I don't know. I just this this is this is such a bigger problem than just the conflict between Israel and the United States, because oil and natural gas are two of the most important natural resources in the world. And unfortunately, a lot of it is produced and refined in that part of the world. And they are going to put a chokehold on that supply chain. And to me, as long as they're able to do that, I don't really think they care about all of the other stuff that's going on in the background. It just seems to me that their number one priority is global chaos. Right? We're not gonna go missile for missile with you guys. We just gonna put y'all in a chokehold so y'all can't breathe no more
Very strategic too.
until you tap out.
Yep. Very
So
strategic.
I like I said, I don't, $200 oil would be crazy. That would be
Yeah.
absolutely crazy. And if that's something that's doable, I might just go have to put a USO YOLO trade on
And let it
and just
rise.
let it ride and see what happens.
Yeah.
So, but I mean, I don't know, because up until this point, nothing, you can't you can't say that it's safe to transport oil through that area of the world right now. You
No.
can't. You
No.
can't. No one has any confidence to go in there and continue their tanker operations at this point
Nope.
because it's
Nope.
not safe.
Nope. And they're not just stopping at that Strait of Hormuz, but they're actually going into like I know they bombed like some part in Saudi Arabia for like the oil field. I think they bombed somewhere else for like the gas. So it's like they're being very, very strategic with their attacks. You know what I
Hmm.
mean? So they're
Hmm.
crippling. I mean, man, they're literally sitting in the best geographically, I say they're sitting in the best region to be able to conduct all these attacks at the same time. You know what I mean? You got Saudi Arabia, Qatar, you got Asia on the other side. So you got all of those different countries who are like rich oil, rich gas. And they're like, hey, you are neighbors. We're just gonna attack you because we got to supply the rest of the world with all the oil and stuff. One of the biggest oil reserves is Saudi Arabia. You know what I mean? So it's like we're just gonna keep attacking you guys. You know. Now is Saudi gonna respond to that attack? I don't know. I'm not sure. We'll see. Once Ramadan is over, it might be all hell broke loose. So we shall see.
You got USO June 18th, 215 calls going for $400 a contract.
Mhm.
And there is open interest in those contracts. You got the 200 calls, you got $460 a contract.
Yeah,
I might have to get jiggy with it and see what happens.
just see what happens. And the way they close today, you never know when they open tomorrow because it closes a hammer today, man. So
Yeah,
it's gonna be interesting.
yeah. It's going to be real interesting to see what happens over the next couple of days. And you have to understand that with oil prices going so high, so many industries are affected right now.
Mhm.
So many industries are affected.
Yep.
So
Yep.
um, I would be, I might short all the airlines before their earnings report.
I mean, at this point, who wants to pay $400 for a one-way ticket to like down the street? You know, nobody wants to do that.
Yeah, because if I'm paying $5.50 a gallon, guess how much jet fuel is going to cost?
Hmm. They're
Yeah,
gonna feel it. They're
and
gonna feel it.
that's going to hurt their margins, man. So
Yep. Yep. But let's pivot a little bit, man. Let's talk about this another major stressor that we've probably seen creeping. We've been talking about this for 3 weeks in a row now, creeping down the street that you guys probably not paying attention to. Private credit. That's a real stress that's coming down. So there's like a lot of rising default, borrower's default. There's a higher interest rate, and redemption request is getting like really, really crazy. We saw what was it last week? Who said that they're halting
BlackRock,
redemption? BlackRock is halting the redemption. Before that, it was something that somebody else was halting redemption. And I think this week, who's halting this week?
Cliff Water.
Cliffwater is also halting redemption. So something is happening. Something is happening. You know what I mean? We're talking about a $2 trillion sector that might have a crazy impact on on the economy. Like they might not have a crazy impact on the banks directly, but those companies that can't secure regular funding from banks, they're going to be under a lot of pressure because who else are going to go to get money from? You know what I mean? So let's talk a little bit about that, man, because I feel like not a lot of people are paying attention. I only saw one podcast that was talking about private credit and the issue that's happening. I have not heard it in the news just yet.
Yeah. I think it's starting to get a little bit more attention, right? I actually went down the rabbit hole on Instagram and saw a lot of people were posting about private credit as far as what's going on. Um, and when you're seeing bigger funds and bigger players being affected, that to me is when you start questioning things, right? Now, the big names like BlackRock, right? They're not going to like die overnight. I don't think that that's going to happen. But some of the smaller players, there's a lot of stress under the surface. Cliffwater, private company, they're not public. I don't think they have a ticker symbol. They have a $33 billion corporate lending fund. They said that investors wanted 14% in redemptions. Cliffwater says we have to cap you guys at 7. So there's a liquidity crunch
Mhm.
and they're not able to get investors the money that they are seeking. That's never a good sign. And we're starting to see these things pop up more and more and more and more and more. And the question that I have when I see stuff like that is this isolated incidents in a certain sector of the market that, is just only going to be affected? Or are we seeing systemic risk?
Hmm.
Because there's two types of risk when you invest. I posted this on my Instagram page. There's systemic risk and there's unsystemic risk. Systemic risk, there's nowhere to hide. It's something that affects everybody. Doesn't matter what part of the market you are. The only way you can hide from systemic risk is being in cash. That's the only way. If you're
Mhm.
invested in technology, retail, semiconductors, you know, biotech, doesn't matter what sector you're in, you're going to get slammed. And that's what we saw in 2008, 2009. And that's also what we saw during COVID. There was nowhere to hide. Unsystemic risk is risk that's isolated to a certain sector, to a certain company, maybe a certain part of the geographical world, etc. I don't know what private credit is now, but the more cracks we are starting to see, the more I'm starting to believe that this may not just be systemic risk. I mean, unsystemic risk.
Mhm.
So a $33 billion fund is not a small fund. That's a pretty large fund. So if the redemption requests continue and people aren't able to get their money out, the question is there a bigger problem under the surface? That I do not know. I can't say for sure, but I will keep saying that I do not like what I see. I really do not like what I see in that sector of the market.
Yep.
And because it's not a small market anymore, it's almost $2 trillion market, the private credit market. I don't know. How ugly does this get? We don't know. We don't know. We could just be scratching the surface. JP Morgan actually came out today and says, yeah, we're going to stop lending to some of these people, or we're going to have stricter
Mhm.
lending requirements.
Mhm.
JP Morgan is a big bank. They're trying to limit their exposure in this area of the market. So the question then is why?
Mhm.
If there's no issues, right? So we'll see how it plays out. But I've been saying this, if we see a market that pulls back tremendously, I will not be surprised if private credit is one of the catalysts that starts that cliff. It will not surprise me because I've been talking about it for months now, and we're starting to see more and more cracks under the surface. So, now if we see a whole fund default from a big name, I think that will get people's attention. Big
Yep.
time.
Yep.
Big time. Yeah.
So there's definitely a lot of stressors happening, man. And it's like, at what point does the alarm get sound? You know what I mean? Like, at what point is like, okay, this is really getting out of hand now. Like, I guess
Hmm.
we've seen the rumors, we've seen things happening under, and I don't even know, like, is there regulation when it comes to exactly?
That's the
So,
thing. The rules that private credit plays by are very different than the rules that public markets play by. It's not as transparent. You really don't know what the value of what you're invested in. Basically, it's what the fund manager tells you. There's
mhm,
no checks and balances. It moves in what people call the shadow banking system.
mhm,
Um, I don't like the sound of that. But the thing is that, and we're not just talking about retail people being exposed. We're talking about pensions. We're talking about big funds, sovereign wealth funds, and things like that that are exposed to the private credit market.
mhm, mhm.
So I don't know, man. I really don't know. I don't like what I'm seeing. I just don't.
Yep, yep. And, and companies are defaulting too. Like, there's a lot of companies defaulting on these things. The so for example, it says Fitch Ratings reported that default rate for U.S. privately monitored ratings (PMR) hit a record of 9.2% for 20, and that's in 2025. So I don't know what that number is today.
Mm,
The broader U.S. private credit default rate, which includes various lending models, rose to 5.8% for the 12 months ending January 2026.
mm.
So it's going up. UBS analysts have also warned of worst case scenario where default could hit 15% if AI triggers aggressive disruption in corporate earnings. So again, there is a lot of things brewing under the hood. Again, I don't know. I mean, this might take another year, maybe another 2 years before we see the full effect of it. How big it's going to be, nobody knows yet because there's no regulation behind it. So who's monitoring those things? Nobody knows.
And I will give you an update on the B of A CC and lower U.S. high yield index options adjusted spread hit a yearly high of 9.69 basis points for the first time.
Mm,
So we're getting to that 10 mark. At 10 is when I start getting nervous. That's when I start getting nervous.
yeah.
And at that point, that's when, if you go look at history, that's when we've seen we stay above 10, that's when you've seen sell-offs, major
Mhm.
sell-offs. So I will keep watching it. It did come down yesterday to 9.45. So we'll see what happens tomorrow morning and see where it ends. But I just, again, this is not something that should be swept under the rug. Let me put it to you that way.
Mhm.
Yeah.
Mhm.
So
Well, let's move on to CPI, man. That's another major news that's coming. So again, looking at CPI, the Consumer Price Index increased a seasonally adjusted of 0.3% for the month, putting the 12-month inflation rate at 2.4%. So I think it's still in line with what Wall Street kind of like said it's going to be.
mhm.
Now, do I trust Wall Street at this point? Heck no. Like I don't trust these numbers because we can all feel those things in the grocery store. I mean, food prices, it went up by like 0.4% for the month, and we're up 3.1% from a year ago. So we went up 3% up, 3.1% up from a year ago. Egg prices fell 3.8%, but again, overall, the food prices are actually all the way up there. So what do we make of that as we start looking at like some of those numbers, also inflation and all that different things? So what is the impact of that we're going to see in the long term?
So I think that if we continue to see elevated oil prices, it's
Mm,
going to register in the CPI at some point. Because remember, CPI is backwards looking.
maybe next month.
Now, core CPI, it won't show because that's X energy and X food. But regular CPI, it's going to start showing.
Mm-hmm.
Now, companies that rely on oil and gas, what happens to those industries? So
Mm-hmm.
let me give you an example. Energy prices don't show up in CPI. Fine. But airline tickets do. If airlines now have to increase their prices because of oil costs going up, that's going to show up in CPI. Industries that are heavily reliant on petroleum products, plastics, and things like that, right? If they aren't able to get what they need, do they also start to increase their prices? We don't know yet. So the domino effect of what happens with elevated oil prices, it's not just based on what you pay at the pump. There's other industries that are going to be affected. And if those
Mm-hmm.
start to show up in the CPI, if this thing really, really, really starts to drag longer, not going to be good. And the Fed
No.
is going to be in a tough spot. And with a new Fed chairman, we don't know what you know, we don't know what he'll do because we haven't seen him in action yet. We just got to wait and see.
Mm-hmm. Mm-hmm.
So it'll be real interesting, man. 2026, I'll be honest with you, I don't see the markets finishing positive anymore because there's no playbook for global conflict. You know,
And
I
especially
would
the U.S. is directly involved. This
correct.
like it adds a
Exactly.
lot more,
It
pressure to it.
So I was at a point where I was a little bit bullish. I was like, "Hey, man, we got good." And I think I said it on one of our episodes. I said, with the exception if we have some sort of global conflict, and here we are.
Bam.
So
Right on time.
the narrative has definitely changed. So
Yeah.
again, I am not as optimistic about what is lying ahead because it does not seem that there's going to be any sort of quick resolution in the future. So
Yep. Yep. So we'll keep an eye on this war. We'll keep an eye on the private credit. I mean, I think those are the two big stresses that we're seeing right now when it comes to
yeah.
to the stock market. That
Hmm.
might have some impact. And I won't be surprised if they hit us back to back. I don't know. I mean, this might hit the fan in one way. We think it's going to be the war, but it's actually going to be private credit and finally Wall Street finally waking up, which I think they kind of are waking up. They know what's happening, so
Hmm.
they might be preparing for a major sell off too. So, but we shall see, man.
Yeah,
Let's move on to some of. Oh, go ahead.
I said this is where I think, like I said, raising cash and just kind of just chilling, not a
Yep.
bad idea.
Yep. Yep. All right, let's move on to some of the economic calendars. I mean, tomorrow we have the initial jobless claims. I bet you they're going to review some numbers again, but we'll see. Revise some numbers again because God dang. We have the U.S. trade deficit coming out so at 8:30 a.m. Housing starts at 8:30 a.m. Building permits 8:30 a.m. And then we have the Fed Vice Chair for Supervision Michelle Bowman is going to speak about bank supervision at 11 a.m. She should be talking about private credit supervision, not bank supervision. But anyways, we have the GDP coming up on Friday at 8:30 a.m. We have consumer spending at 8:30 a.m. We have the PCE index and then core PCE index also coming at 8:30 a.m. So that's going to be interesting to keep an eye on. But again, that number might not take into account what's happening this month, right? Because the core is also backwards.
No, core PCE does not include energy and food.
Energy. Okay.
Does not. No.
Yeah. And then we have the JOLTS report, which is the job openings report at 10 a.m. That one is usually, if you're not paying attention, that one can catch you by surprise, especially if the number comes in a lot lower. That might throw some people off at 10 a.m. It comes 10 a.m. right when the market opened, 30 minutes after the market opened. So keep an eye on that one. But coming up next week, we have core PPI on Wednesday. That's at 8:30 a.m. We also have, I'm trying to see, is the Fed report? No, Fed is not report this week. So that's probably some of the biggest ones. The only big one we have next week is the core PPI coming up on Wednesday at 8:30 a.m. And then, the FOMC decision also, a rate at 2 p.m. Eastern.
Yeah, that's next week.
On Wednesday, also the 18th, March 18th. That's another one to keep an eye on. As you guys know, when Jerome talk, the market might go one way or the other. So keep an eye on that one also. But are there any earnings that you're watching for next week, Wale?
Next week, none that I can think of now. I know Oracle reported pretty good earnings. I think that stock had sold off pretty tremendously.
Yep.
But one of the things that I think that did help the stock today was they are planning layoffs.
That's ridiculous, man.
So, good report, but again, we're seeing more layoffs. We're seeing more layoffs. I think we could see 4.5 or 4.6% unemployment soon.
And it's coming, man. And those layoffs, it's not like a layoff that's like we're not making money. It's a layoff that's like you're getting replaced by something else. So we don't really need y'all. So the only company that I see still hiring, regardless of what's happening with AI, is IBM. IBM is actually like hiring a lot more people for their instead of like laying people up, they're actually hiring people because I don't know what they figure out, but IBM is always backward too for me. It's like, you had a hold on AI 10 years ago and you didn't do anything with it. So I don't know what they're doing. So we shall see what happens with this one. But it's gonna be an interesting week next week for sure. I mean, we have the war, we have the private credit, and then we have the FOMC decision and all these different things. All right, man. As we about to wrap up, any last minute advice you want to give the people?
Don't be in a rush to buy any stocks. That's it. That's it.
That's a bar right there.
Sometimes the best thing to do in this environment is to do nothing. Sometimes that's the best thing you can do. So don't feel you are, and if you do plan on buying stocks, this is another thing. Let's just say you see a stock that you want to buy. If it drops, put yourself in a position to be able to buy more. That's all I'm gonna say.
There you go.
So because if you liked Nvidia at 180 and it's 160, to me it doesn't make sense for you not to buy it at 160.
Yep.
If you liked it at 160, to me it doesn't make sense for you to buy it at 120. Again, as long as the business is intact and what is driving the stock down has nothing to do with the core business. And it's just headlines and it's just the overall market getting smacked. To me, those are good opportunities. Right. Now, if there's something wrong with the core business, it's a completely different story.
Right.
So make sure you do your research.
That is a fact.
Yep.
Well, that will do it for today's episode, man. And again, like while I say, please, just be cautious out there. Don't take yourself out of the game by trading too much. If you don't see the opportunity, please don't trade. If you're not a really good scalper, if you're not a really good day trader, this is probably one of those times where like while they say you can sit down in cash, maybe get like long-term positions and just kind of chill and see how this war impact everything. I'm waiting for either a big break on either sides, either we break this consolidation we've been in for the past couple of months now. Either we break those, whether we break it to the upside, whether we break it to the downside. That's what I'm waiting for in order to like really size up. You know what I mean? But other than that, I'm gonna stay as nimble as I can. Not not be able to not throw everything to the market. But again, as always, remember, man, the market moves fast. Things can change quickly. Tomorrow we can wake up and there's a deal with the war and the market run up. Tomorrow we can wake up and it's like we are all in the war and everything is crashing. So again, just be mindful of that. But with that being said, if you guys enjoyed today's breakdown, please make sure you guys follow, subscribe, and don't miss our next episode. We'll continue tracking the market, the economy, this whole war we're going, and as much as we can, we will always bring you guys the news as best as we can. Well, I'm your co-host Billy Clement. I got Wale with me. Thank you guys.